Welcome to Smart Finance Talks.
Today, we're looking at BlackRock. You often hear it called finance's final boss.
Quite a title, right? It really speaks to their perceived power.
Definitely. So our goal today is to sort of unpack that. We'll look at the founder, Larry Fink, how BlackRock grew this thing called Aladdin.
Ah, yes, Aladdin, very important.
The whole ETF boom, their influence in companies, politics, and some of the controversies too. Basically trying to get a clear picture without getting totally overwhelmed.
Exactly. And it's crucial because, understanding BlackRock really helps you understand how modern finance kind of works. They manage a huge slice of global capital.
Right. So let's start with Larry Fink. He wasn't born into Wall Street royalty or anything.
No, quite the opposite. Sources say a pretty modest background. He actually studied political science.
Which is interesting. Then jumped into finance at First Boston. Became a bit of a star trader in mortgage-backed securities.
Yeah, those are basically like bundles of home loans turned into bonds. He was very successful until he wasn't.
The turning point. That $100 million trading loss, that's gotta sting.
Oh, absolutely. And it led to him leaving First Boston. But, sometimes those big setbacks are, well, they're formative.
They really can be. It seems like it fueled his next move, didn't it?
Completely. That experience seems to be the core reason he founded BlackRock in 1988. The driving principle. Better risk management. Don't let that happen again.
Makes sense. And they grew fast. Our sources say $1 billion under management in the first year.
Incredible, yeah. It clearly tapped into a need, or at least a perceived need, for that kind of risk-focused approach.
And that focus on risk directly connects to Aladdin, right? Which you mentioned is, well, key.
Absolutely key. Yeah. Aladdin is maybe BlackRock's biggest edge. It's this massive analytics and risk management platform Fink developed internally.
So not just trading instincts, but like serious data power behind the decisions.
Exactly. It gave them this incredibly deep view of markets, risks, asset correlations, stuff that was way ahead of its time.
And the scale now is just mind-boggling. What is it, overseeing something like $20 trillion?
Over $20 trillion in assets on the platform, which, roughly 10%, maybe a bit less, of all global financial assets. It's huge.
Wow, okay. And alongside that tech advantage, they also rode the wave of ETFs, exchange-traded funds, particularly with their iShares brand.
Big time. ETFs really changed the game for individual investors, didn't they? Made it super easy to buy a diversified basket of stocks or bonds.
Yeah, much more accessible. And iShares became, well, pretty much the dominant player globally.
Which, of course, feeds back into their overall size and influence. When you manage that much money through ETFs and other funds,
you end up owning significant chunks of major companies.
Precisely. The sources point out they're often a top shareholder. We're talking like 3 to 8% stakes in massive corporations, even places like Germany.
And that kind of ownership obviously brings influence, or at least the potential for it.
Right. And it's not just corporate influence. The sources also mention this revolving door phenomena.
Ah, yeah. Former government officials joining BlackRock. That always raises eyebrows about political connections, potential policy influence.
It does. And look, they haven't been without controversy. There was the Cum-Ex scandal investigation in Germany back in 2018. That was a complex tax thing.
Right, tax arbitrage schemes. And just broader concerns sometimes about, one firm having that much market presence. Is it too much?
It's a valid question people ask. But it is crucial, and the sources emphasize this, to remember BlackRock manages this money for clients. They don't technically own it.
Okay, that's a key distinction. They're fiduciaries. Legally supposed to act in their clients' best interests.
Correct. So summing up, you've got Larry Fink's vision, born from that early setback. You have the power of Aladdin providing data insights, the massive scale from ETFs,
leading to significant corporate shareholdings and, well, undeniable political connections too. It makes them this incredibly influential data-driven force.
Yeah, even if Fink himself isn't always, front and center in the headlines, the firm's impact is just immense. They shape markets, whether directly intending to or not.
So it leaves you thinking, doesn't it? When you consider that sheer scale and influence we've talked about. What are the potential upsides and downsides of having so much financial weight concentrated in one place?
That's the big question, really. How does that concentration of power affect the global economy, stability, competition?
Exactly. Something for all of us, you listening included, to mull over. How does knowing this maybe reshape your view of how things work? Definitely food for thought.
Indeed, a lot to consider.